The Australian share market has seen its worst one-day fall since the global financial crisis. More than $130 billion has been wiped off the value of shares due to the worsening coronavirus and a crash in the price of oil. For more, we're joined by the presenter of The Business, Rachel Papazzoni. And Rachel, the markets were in a downward spiral right from the get-go today.
Right from the very beginning. And often what we see, Gemma, is an initial quick dive and then things kind of settle, but that has not happened today. The ASX ending the day down 7.3% for the top 200 companies. Losing 456 points down to 5,761. The All Ordinaries Index, which covers all companies listed on the ASX, down 7.4% to 5,822. We were watching markets today and seeing it down 3, 4, 5, 6%. So to see both indexes down more than 7%, as you say, the biggest one-day fall that we've had since the global financial crisis, $137 billion wiped off the value of the top 200 stocks today. If we look more broadly at the last couple of weeks, it was only about 2.5 weeks ago where we had our record high on the ASX. So we've wiped off almost 20%, 19.5% off this value of companies listed on the stock exchange in just over 2.5 weeks. That is all of last year's gains, and that was a remarkable year to jump 20% in 12 months. $413 billion wiped off the value of Australian companies since the 20th of February. Once we get to that 20% fall, that means we're in the technical definition of a bear market. That signifies that the share market is going down. There is no growth happening in the share market. It also signals a very, very likelihood of a recession. What we've seen over the 24 hours, which has really triggered this massive fall today, is oil stocks. Now, Russia failed to agree with the oil producers cartel OPEC on production cuts. And the calls for production cuts have been there because of coronavirus, means that there's less demand for oil. And so Russia said no. Saudi Arabia cut its official prices, and so we've seen this kind of price war happening over oil. So all sectors in the red today. Oil, the big or energy stocks, the biggest losses. Banks also falling. The Australian dollar had a flash crash, falling to just above 63 US cents. It's come back a little bit. It's now worth about 65.5 US cents. But as you say, a massive day on Australian markets today.
And Rach, how big is this risk of recession?
Well, as I said, because we're now teetering on the edge of that 20%, that's, I guess, a technical term, a technical signpost for market watchers and economists. But this is a question we've been asking economists on The Business for the last couple of weeks today. On the program tonight, we speak to Felicity Emmett. She's the senior economist with ANZ. And I said to her, how likely is it that in a couple of months we'll be sitting here talking about the recession that we're in? She said it's very, very likely. What needs to happen is 2 quarters of negative growth. So you may recall a week or two ago we were talking about GDP numbers out for the December quarter actually beat expectations, up 0.5%. So that's growth. But what everyone is expecting is that this first quarter will be negative because of not only the bushfires but the coronavirus and what impact that is having on the way people are spending their money. And if it continues, if this uncertainty that we are seeing globally continues around coronavirus, it's very likely that we'll see a second quarter of negative growth. Businesses will be reluctant to spend money because they don't know what their likelihood of performing well will be. And if we get those 2 quarters of negative growth, we will be in a recession. This is a little bit of what Felicity Emmett said to me earlier.
There is, I think, an increasing chance is that we will be here in September talking about exactly that. But in the meantime, I think we'll be watching things like labour market numbers, watching to see what the unemployment rate does. And I think this is what the government is really quite concerned about, is that firms will start to lay off workers and then that impact on the economy just multiplies.
What does it take for us to start talking about recovery, and what does that look like?
Look, I think it's really hard to have any concrete idea of that. You know, the virus could go on for some time. The economic closures that we're seeing could go on for some time. We've seen in northern Italy, you know, quite significant closures, and that will flow through to the global economy. The more of those that we see, the greater the impact on the economy. But this could go on for some time, where the virus hits different regions, you get different shutdowns, and then that continues to impact confidence and markets. So there is a growing sense that this is going to be a longer term shock than the initial feeling that it would be a short, sharp shock with a V-shaped recovery.
Now, when will we hear from the government about a stimulus package?
Well, that's the million or billion dollar question, Gemma. We heard from the Treasurer last week that there would be a stimulus package. It would start with a B for billions. Pressure has to be mounting on those on Capitol Hill in Canberra about when they will deliver this stimulus package. It's all anybody in the business world and the economics world talks about. Of course, we had the global financial crisis back in 2008. The Rudd government then announced $10 billion plus $42 billion in stimulus, so more than $50 billion over the course of 6 months. That kind of package included cash handouts, infrastructure investment. Of course, you'll remember the pink bats and the school halls. There were also government guarantees for bank deposits for investment that were made beyond $1 million. So a broad approach. It's a very different economic situation we find ourselves in now, because it is mostly driven by a supply crisis. The fact that so much of our goods come from China, so businesses just cannot get the things that they need to create their business and to continue operating. So we're at a supply issue, so any stimulus needs to address those business concerns, particularly for small and medium businesses. But as Felicity went on to tell me, we're now also in a demand crisis. So that's you and I going to the shops, going to the movies, buying toilet paper, etc. So this stimulus package needs to come from both fronts, and as I said, the pressure must be mounting on Josh Frydenberg to present that to the public very soon.
Yeah, indeed. And returning to the markets, what do the next 24 hours look like?
I think we're still in for a pretty downward spiral, Gemma. Just looking at futures for Wall Street, so that's predicting the sales that will happen on Wall Street tonight. The S&P 500 looks like it's going to be down 5%. If that's the case, we can expect very similar falls again here on the ASX, because we often just replicate what we've seen in the US. So hold on tight.
Yeah, indeed. Rachel Papasoni, we'll see you on the business tonight. Thank you.